Hello! Today's video will cover the basics of charitable contribution requirements for nonprofit organizations. Nonprofits that receive charitable contributions should be well versed in the regulations over IRS disclosure requirements before accepting contributions. During this short session, we will cover the basics of what nonprofit organizations should know about record-keeping rules and donor acknowledgements. A donor cannot claim a tax deduction for any contribution of cash, check, or monetary gift unless the donor maintains a record of the contribution in the form of either a bank record, such as a canceled check, bank statement, or credit card statement, or a written communication from the charity, such as a receipt or thank you letter, which shows the name of the charity, the date of the contribution, and the amount of the contribution. Specifically, if the donor makes a single contribution of $250 or more, a bank record alone will not suffice. The donor will need a written acknowledgement of the contribution from the charity. Although it is the donor's responsibility to obtain a written acknowledgement, nonprofit organizations can assist in providing a timely, written statement containing the necessary information, which includes the name of the nonprofit organization, amount of cash contribution, or if it is a non-cash contribution, include a description of the item contributed. Please note that it is very important that this description not include a value for the item. It is the donor's responsibility to determine the value of items donated for their own tax purposes. In addition, the written acknowledgement should include a statement that no goods or services were provided by the organization in return for the contribution, if that was the case. The donor will need the acknowledgement by the time he or she actually files their federal income tax return for the year of the contribution or by the due date of the return. However, it is generally considered a best practice to provide the acknowledgement either shortly after receiving the donation or by January 31st at the latest, so the timing is in line with all of the other tax paperwork the donor receives, such as W-2s, 1099s, etc. These written acknowledgement examples provide the basics of what a donor needs in order to claim a deduction on their tax records. It is important for nonprofit organizations to share this information with the Development Office so that they can ensure this critical information is being incorporated into thank you letters, which may also include language designed to build donor relationships, such as key information about the nonprofit organization's mission and information about how the donor can continue to help the organization. Here are a couple of examples of phrases that nonprofit organizations can add to written acknowledgments to alert donors of the importance of hanging on to the written acknowledgement for their tax records. These phrases are carefully written so as to alert donors without providing specific tax advice. Quid pro quo contributions refer to contributions in which a portion of the contribution is charitable in nature and the donor received goods or services from the nonprofit organization for the remaining portion of their contribution. In these situations, the donor may only take a tax deduction to the extent that their contribution exceeds the fair market value of the goods or services they received. In these instances, nonprofit organizations are required to provide a written disclosure statement to the donor if their contribution was more than $75. A common example of quid pro quo contributions are tickets sold for fundraisers. For example, if a nonprofit holds a concert to benefit the nonprofit and a donor buys a ticket to the concert for $150, the nonprofit needs to provide a written disclosure of the fair market value of the ticket. In the example on this slide, the fair market value was $60, so the donor knows that their tax deduction may not exceed $90 in this case. The written disclosure for quid pro quo contributions should be given when the contribution was solicited or received and should include a couple of pieces of key information. First, it must inform the donor that the amount of the contribution that is deductible is limited to the excess of money contributed over the fair market value of the goods or services provided by the nonprofit, and it must provide the donor with a good faith estimate of the fair market value of those goods or services received. This slide includes an example disclosure that contains all of the required elements. This can be provided in many different ways, including a thank you letter, a receipt at the time of online contribution, or on the ticket itself. Thank you for viewing this video. If you have any questions, feel free to contact us here at Heinfeld Meach. Have a great day.